All right. Good morning, everybody. Odd to say good morning. We usually do webinars in the afternoon, but welcome everybody to today's webinar, How to Trade Like the Pros. Beautiful day here in the Charlotte, North Carolina area. Hope you guys are enjoying some nice weather today. Just want to do a quick sound check just to make sure you guys can hear me okay, that you can see my screen. How to Trade Like the Pros, bunch of very confident men and women there, silhouettes of them, just to make sure you guys can see me, see my screen. I want to thank everybody joining me via YouTube as well. So we're streaming live on YouTube and GoToWebinar as well. So good. Robert says okay. Elaine says sound is good. Well, fantastic. Awesome, guys. Well, thank you guys for being here, taking some time out of your Tuesday morning. My name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. I always like to introduce you guys to our education team, and boy, has it grown over the years. You know, my 17-year anniversary with VectorVest was yesterday, and I remember when I first started, I was in the product support department like everybody when they first start, talking to folks on the phones, answering the phones, like things like that. And I remember the education team back then was like one or two people. So we've obviously grown so much over the years, and I believe we are a more well-rounded, more evolved education department, because back then we really only focused on the VectorVest system, everything and anything that had to do with the VectorVest program, how to build watch lists, how to run searches and portfolios and backtests and all that stuff that really had to, again, deal with the VectorVest 7 program. Back then it was Pro Graphics, if you guys remember that, VectorVest Online. But now we teach folks how to trade options and how to manage a retirement portfolio and how to swing trade. We teach a lot of swing trading strategies that are that you might use in a more aggressive type portfolio. Okay, so really proud of these folks. We have you covered no matter what type of portfolio you're managing, right? You don't have to just be managing one type of portfolio. You can kind of venture out and diversify and use different types of investment vehicles, investment instruments to make money year over year. So first things first, I call them the three gets. Get number one, get a pen and a piece of paper, something to drink, of course. I will ask you guys to write a few things down for me later. Okay. Get rid of any distractions. This is easy for me today. My wife is a teacher, so she's got the summer off, and I have a 5-year-old and a 2-year-old. But the 2-year-old's in daycare. My wife took the 5-year-old to the library, home by myself. No distractions for me today. And hopefully you guys don't have any, because you're all here and you're ready to learn. I really commend you for that. Again, it is 11 a.m. on a Tuesday morning. So, really, really happy that you guys are here. Here are the things you're going to learn today. Doreen, I'm not going to get into the definitions of any VectorVest indicators here today. If you need any help with that, you can give our support department a call. You can also pull up a stock analysis report of any stock in the program. I won't be going into the program much here today, but what you will learn today are 5 common principles professional traders follow, an extremely easy and effective short-term trading strategy, and I really emphasize short-term, and then finally how to quickly and easily identify the best trades. And I think this will help. If you guys stick with me to the end, I will share with you a copy of the slides I use here today. Okay, I think this will help. Like I said, I'm going to be in the slides for the entire session here, and I'd like for you to stick with me to the end. So if you do, just somebody remind me at the end. I sometimes forget. We'll be together for about an hour, and just kind of, right about 11:45, about 40 minutes from now, say, hey, Jerry, don't forget the slides, and I'll put them in the handout section of your go-to meeting control panel. Okay? So let's begin. Let's start off by talking about what makes a pro a pro. All right, what are the qualities that separates these men and women from the average retail investor? And this segment here is all about getting your mind right, getting you in the correct mindset, because excuse me, this is not your buy and hold retirement approach. This is for the capital that you have set aside to trade a little bit more actively. And we feel you're doing that. So like I said, we have you covered no matter what type of portfolio you're managing. Maybe you do trade options. Well, an option trade, I don't think should be put in the same portfolio as a retirement holding, right? Or a swing trade. You should be allocating portions of your overall investment capital to these different types of methodologies. Swing trading, more long-term, buy and hold, retirement-minded approach, maybe options, maybe a dividend portfolio where income generation is the most important thing for that portion of your capital. So this is for the portion of your overall investment capital that you're looking to trade a little bit more actively. Okay? So know that going in. Know that we're not going to talk much about, Doreen's asking about value. We're not going to talk much about value today, or safety, or earnings growth rate. None of these fundamental indicators. We're going to look at technical studies and technical setups to identify trades. Okay? So the first thing that separates a pro from a retail investor is that they are realistic. They know that there's no magic pill that they can take that will make them better traders tomorrow. And we're all looking for that quick fix sometimes. Success in this industry, in any industry really, comes with time and effort. Just ask anyone who's ever been good at anything, right? Or who's ever gotten to the top of their respective fields. They'll tell you that it took hard work. It didn't happen overnight. I always use the professional basketball athlete analogy. Those guys, yes, they were born with some God-given ability, but boy, did they work, right? I was an athlete when I was in high school, and I did my best to get to the Division II level and got a full scholarship. But those guys and girls, they put in a lot of work to get to the WNBA, the NBA, the NFL, Major League Baseball, right? They really put the time and effort in. They're always the first ones on the field or in the gym and the last ones to leave. So what it's going to take to get you folks to professional levels of understanding the market and understanding how to trade, it's not going to happen overnight. It's going to come with some time and effort. And next is that they control their emotions. They don't allow losing trades to affect them. This is easier said than done. I understand that. But pros don't think of the results first. They don't think of the money first. They focus on doing the right things and making the right trades. They know if they do that, the money will come. And we don't want to end up like this guy, right? We don't want to allow our emotions to take over and dictate decisions moving forward. Try to stay as even keel as possible. And one of the reasons they feel this way is because they place trades based on facts and data rather than feelings, gut feelings, recommendations from newsletters or recommendations from family members. I started with VectorVest 17 years ago, and earlier on in my career, when I didn't know much about the stock market, I placed trades and bought stocks, because I had a feeling that they were going to go up. Well, pros don't think that way. They look solely at the information in front of them to make decisions. Next is they're prepared. They know exactly when they're going to get out of a trade even before getting in. So I'm going to kind of pose that rhetorical question to you guys. Do you know, with every trade that you place, exactly when you're going to get in, when you're going to get out, either at a gain or a loss? Okay? They know this because they've examined and tested different techniques to figure out which one is best. It's not arbitrary. It's not just a 10% trailing stop on every stock that they buy. It's a lot more than that. Lastly, and most importantly, I think professional traders are disciplined. They stay sharp and focused when things are going well, and they're resilient when things aren't going so well. When you run into a cluster of losing trades, right, maybe 4 or 5 in a row, 6 in a row, that's going to happen. You have to be resilient during those times. They have a plan, and they stick to that plan. Now, what happens if you continue to struggle with some of these things? You're going to wind up broke. Now, I don't mean you're going to be unemployed, living on the streets, but you won't be playing this game too much longer, right? Because losses will just keep building up and building up and building up, and you'll wind up broke with normal money to invest. If done the right way, if you start to correct some of these mistakes that you make, or kind of belief systems, beliefs that you hold, you'll know exactly what you're doing them out of the situation. So think about the confidence that you'll have. And once you start to develop better habits, it's about habits, right? It's about a systematic process to doing this. You'll start to see more consistent gains. Now, there is a big mistake that traders make when first starting to implement short-term trading strategies. They follow unproven, complicated strategies. They think that they need to use, 5 or 6 different technical indicators and throw 5 different types of moving averages on the chart to identify entries and exits. For some reason, new traders who are just starting out trading this way, they find value in complexity. And I'll tell you, that only leads to confusion and frustration. Confusion in, one indicator is giving me a buy signal, another indicator is giving me a neutral signal. One indicator is giving me a buy signal, the other indicator is giving me a sell signal. If you have conflicting signals or even redundant signals, it's going to be confusing. You'll wind up kind of throwing in the towel and say, this short-term trading business is not for me. I'll just go back to, kind of my, 10 to 12% a year, maybe 15% a year, and that's fine. That's fantastic. More of a longer-term approach. Whereas if you start doing things the right way and implementing the right short-term trading strategies, you will see your portfolio, or at least your swing trading portfolio, you're looking at 25, 35% a year. And with that portion of your capital, you can really supercharge your overall account by trading a little bit more actively. Now, what I want to show you today, you may have heard of this system. It's called the RSI-2 trading system. It was developed by Larry Connors. Larry Connors is an author. He's a trader. He has over 30 plus years in the financial markets industry. This strategy focuses on stocks in long-term uptrends, but are experiencing short-term corrections. All right, that's all well and good, but how do we define both of those, right? There's kind of 2 situations here that we have to focus on. We have to focus on the long-term trend and the short-term trend. So how do we do that? What I love about this system is that it's so simple. It only uses 3 indicators, okay? The 200-day simple moving average to identify the long-term trend, and a 5-day simple moving average, and a 2-period relative strength index for the short-term trend or the short-term correction. All right, let me show you how this strategy works. So here we're looking at Procter & Gamble from November of 2018 to November of 2019. Don't worry why I went back so far. I'll explain why I went back so far in a little bit. I can go to 1960 and show you a chart and teach you the technique. It doesn't matter the time frame. But again, I'll explain why I went back this far in a moment. But during this time frame, great looking chart, right? Bottom left to upper right. Price stays above the 200-day moving average the entire time. But like all stocks do, they pull back and fall below, in this case, the 5-period simple moving average. Long-term uptrend, right? I told you how we need to kind of define both situations. How do we define the long-term uptrend? We use the 200-day moving average for that. As long as price is above the 200-day moving average, you are in a long-term uptrend. Short-term correction is defined as price below the 5-period moving average. Long-term uptrend, short-term correction. All right, that's 2 of the 3 indicators, right? The third indicator is relative strength index, RSI. RSI is scaled between 0 and 100, and the industry standard look-back period is 14. We're looking at daily price charts, by the way. This is not an intraday chart. It's not a weekly chart or a monthly chart. It's a daily chart. So a 14 RSI, a 14-period RSI, in this case, it's a 14-day RSI, 14-day look back. That is the industry standard, where the lower extreme level is below 30 and the upper extreme level is above 70. Those levels indicate oversold and overbought situations. Using the industry standard settings, you can see that the RSI fell only below 30 only one time during this time period, which now I had to extend out a little bit further because follow my cursor here. We were looking at November of 18, right, to November of 19. Not once during that time period did the 14-period RSI drop below 30. I had to extend it out just to show you that, hey, that would have been a good buying opportunity in general just by using the 14-period RSI going from below 30 to above 30. But Larry Connors looked at this and said, you know, a 14-period RSI, like the indicator, kind of suited what he was looking for in helping identify a short-term overbought situation. That's really what RSI does. It identifies overbought and oversold situations. Well, what he did was he took the 14-period RSI and he lowered or dropped the look-back period down to 2. He wanted more signals. He wanted more signals. When you do this, you also have to adjust your extreme levels. So you can see now that the green indicator at the bottom is now a 2-period RSI, 2-day RSI, with the lower level at 10. The upper level is at 90, by the way, if you were looking to go short, but I'm only going to show you the bullish setup here. You're probably asking, well, or thinking about, well, why a 2 RSI? And why 10? Why a 200-period moving average and not a 150? Why the 5-day simple moving average and not like an 8-day EMA? Well, I don't know exactly. Well, no, I do know exactly why he landed on these 3 indicators is because they work the best, right? I'm sure he tried a 4-period RSI or a 6-period RSI. Maybe he did try the 8-day EMA, but it didn't work the best. This is a published trading system, publicly public record. You can go and just Google RSI2 trading system and see all about it. So he didn't publish it because it wasn't the best, right? He published it because it was the best combination of the indicators that he was looking for. So here is the trade. Ready? Got 3 indicators. 3 rules have to be true. The first rule is that the price of the stock has to be above the 200-day moving average. The second rule is the price of the stock has to be below the 5-period moving average, and the third rule has to be the 2-period RSI below 10. Not or. So it's not the 200-period moving average with the 5-period with the price of the stock below the 5-period moving average or the 2-period RSI below 10. End. These are all end rules. Okay? So again, price above the 200-day moving average but below the 5-day moving average and the 2-period RSI below 10, there is your trade. Okay, let's take a look at what it looks like written down on paper. Here are the entry rules. Okay, entry rules are we buy only when the stock is above the 200-day moving average but below the 5-period moving average and the 2-period RSI below 10. Here's the kicker. Here's something that we're not necessarily used to. We enter the trade near the close of the day, right? We're used to kind of entering at, after the open, 10 o'clock, maybe after a little bit after that. We're going to take these trades near the close of the session. If at the close of today, for example, 345, we're looking at this about 345, 350 Eastern time. If the price of a stock is above the 200-day moving average, but below the 5-day moving average with the 2-period RSI below 10, that is a setup. And we would buy the stock near the close of the session. When I trade this system, I trade it often. I'm just using a market order. Don't mess around with limit orders that late in the day. You might not get filled, and you want to get filled before the close. So you're entering in a market order right near the close of the session. The exit criteria is as follows. We exit when the price goes above the 5-day simple moving average, and we exit near the close of that day. Okay? So we are entering when the price is below the 5-day moving average. We will exit when it goes above it, but we will exit near the close. So we are entering and exiting trades near the close of a given session. Notice how it says exit criteria and not stop loss. There is no stop loss here. No stop loss. What I would say, though, is in terms of cutting your loss, we always live by the 1% to 2% rule. You guys familiar with that rule? don't risk more than 1 to 2% of your overall portfolio value on any one trade. So that means that, let's say you have a $50,000 portfolio. You don't want to risk more than $500 to $1,000 on a given trade. So I always use that general cardinal rule in every trade that I place. So if the stock price doesn't go above the 5-day simple moving average, but I look at the position and I see myself down 1%, not 1% on the trade, 1% of the overall portfolio value, I'll cut my loss at that point. You don't want to blow up a portfolio by allowing a small loser to become bigger. And we use that 1 to 2% rule as a cardinal rule with every trade. So let's take a look at some examples here. We're still going to look at Procter & Gamble for now. And the date that you see there is July 23rd, 2019. And remember when we were looking at the long-term chart, right? The price of the stock during the time period that we're looking at was above the 200-day moving average, right? But notice what happens when I zoom in here. We lose that 200-day moving average. I can't see it. I don't see the purple line. I see the white line, which is the 5-day moving average. I see the green line, which is the 2-period RSI, and I see the value, the red line, horizontal line there at 10. So just know, though, with every setup that I'm going to show you here, the price is above the 200-day moving average. So on July 23rd, 2019, we have an RSI 2 setup. Price of the stock is above the 200-day moving average, but is below the 5-period moving average, with the 2-period RSI below 10. Okay? I don't know what the price of Procter & Gamble was at 3:55 p.m. Eastern Time on July 23rd of 2019. I just don't have that data. I know what the close was. So for the purposes of my demonstrations or my examples here, I'm just going to use the closing price. We're trying to get in as close to the close as possible. So on that day, we buy near the close at roughly 113.85. We sell 1, 2, 3 days later at $114.73. Now, I know that's not a big winner. I don't want you to focus on dollar amount yet. I want you to focus on our hit rate, our winning percentage first. We'll kind of apply a dollar amount later, but first let's just focus on our winning percentage. So take out that pen and a piece of paper, put a tally mark in a win column, because that's a winning trade. The very next day, you had another RSI 2 setup, didn't you? Right? Is the price of the stock still above the 200-day moving average? Is it still below the 5-day moving average? Is the 2-period RSI still below 10? Yes. So let's just say you didn't buy the stock the day before, for whatever reason. I don't know. You didn't have a buying power. You weren't watching the market. Whatever the case may be. But you had another opportunity, and this is what I'm showing you. I'm showing you opportunities, setups, chronological setups that will demonstrate no matter which setup you take, here is the probability of you making money. Again, don't worry about how much yet, but did I win on this trade or did I lose on this trade? What's the probability of my winning percentage? What's my winning percentage likely to be no matter which RSI 2 setup I take? So here, if we buy at roughly 113.15, we still sell a couple of days later. And look, I know what the price of the stock did afterwards. Not concerned about that. This is not a home run hitting strategy. I'm looking for single after single after single after single after single wins. That's what I'm looking for. Okay. On that day, we sell again, right? Price of the stock closed above. And you notice what happened on this day, July 26th of 2019, only in the trade a couple of days. The price opened below the 5-period moving average, but ran above it, went above it during the day. We don't close the trade during the day when the price of the stock just crosses above the 5. We wait till the end of the session. If we see that the price of the stock is going to close above the 5-period moving average, we exit the trade, and that is another winning trade. So put another tally mark in the win column. A couple of weeks later, we had another setup, okay? August 5th of 2019, about 3 weeks later. 2 weeks later. Price of the stock still above the 200-day moving average, but is experiencing a short-term correction, right? The stock is still in an underlying uptrend, but we're in a short-term correction. Price has fallen below the 5-period moving average, and the 2-period RSI went below 10. So if we buy there at roughly 113.08, again, close to the close as possible, we'll sell 2 days later at 115.52. Another winning trade. Not too concerned with what happened afterwards. If it's a good stock, if the price is still remaining above the 200-day moving average, I will continue to monitor it for another setup. And remember, that was on August 5th of 2019, so another win. The very next setup was September 10th of 2019, a little over a month later. And you're not going to be trading with this system. You're not going to be trading the same stock multiple times a week. You know, we'll go through how many setups there were for Procter & Gamble here over the last couple of years in a moment, but you won't be trading multiple times a week. September 10th was the next setup. Is the price of the stock still above the 200-day moving average? Yes. Is it experiencing a short-term correction? It sure is. Price has fallen below the 5-period moving average and the 2-period RSI below 10. If we buy there at roughly 119.88, nice quick gain there, right? Just a couple of days, we sell at 122.77 for another winning trade. When was the next one? Pretty simple, not that difficult. 3 rules, not 7, not 5 or 6 different indicators. It's 3 indicators. Price above the 200-day moving average, telling us that the stock is in a long-term uptrend, but is experiencing a short-term correction where price falls below the 5-period moving average, and kind of your confirming indicator there, the 2-period RSI going below 10. We buy near the close of the session there at 121.08. We sell a couple of days later at another really nice short-term gain there, $124, really close to the high of the session there. So perfect trade there, right? Perfect trade. Another win. All right, so far so good. I'm not skipping over dates, by the way, guys. I'm going chronologically. I'm not skipping over any dates here. After October 2nd of 2019, the next one was October 14th of 2019. So far so good, right? We've had, I think, maybe 5 consecutive winning trades. That's pretty good. So here on October 14th, 2019, we got another setup. Price is still above the 200-day moving average, but below the 5-period moving average with the 2-period RSI below 10. If we bought there at 120.05, we sold there at 119.08. Now you'll notice that that is a losing trade. That is a losing trade, right? Is it a stop loss? I wouldn't call it a stop loss. I call it an exit criteria. It's an exit criteria. Okay? So put a tally mark in the loss column. Put a tally mark in the loss column. Now, though, if you didn't buy it on that day, you had another opportunity on October 15th. Another opportunity, right? Price is still above the 200-day, but below the 5-day and the 2-period RSI below 10. So there, if I buy at 117.20, I'll sell on the same day at 119.08. That's a win. And a couple of days later, you had another setup where if you bought at 116.63, you sell there at 119.08. You had another win. So I showed you guys 8 consecutive RSI2 setups for Procter & Gamble from basically July of 2019 to October of 2019. 8 of them. 7 winning setups and 1 losing setup. That's pretty good. That's a pretty good hit rate for 8 consecutive trades, right? And I get it. So it's only one stock. It's only a small sample size. I explained earlier, or I said earlier, how I would explain why I went all the way back to 2019 or 2018. It's because I knew that a sample size of 8 setups for one stock isn't good enough to drive home the efficacy of any system. So what I decided to do was I did the same exercise that I just went through with you guys from November of 2018 all the way to current. And there were a total on just Procter & Gamble, total of 62 RSI2 setups. What's an RSI2 setup? Let's review. Price above the 200-day moving average, but below the 5-day simple moving average with the 2-period relative strength index below 10. That is an RSI2 setup. There were 62 of them from November of 18 to current. I showed you guys 8 of them. Of the 62, there were 52 winning setups, 10 losers, That's an 84% winning trade percentage. So if you would have traded the 62 RSI 2 setups from November of 18 to current on Procter & Gamble, you would have won 84% of the time. Okay? Now, let's look at some more examples, or a more empirical test than just a cherry-picked stock. So what I did was, look at the data at the bottom left. As of March 7th of 2023, the top 5 CI stocks in the S&P 500 no petrol watch list were the 5 stocks that you see there. Why CI? Comfort Index is a VectorVest proprietary indicator that measures a stock's ability to withstand long or lengthy pullbacks. You ever hear the Ulcer Index? The Ulcer Index rises the more and the further a stock price falls. The Ulcer Index will fall the more and the further a stock price rises. That's what the CI indicator does. The CI indicator rises the more a stock's price rises. And the CI indicator will fall and go below 1 the more and the further a stock price falls. So high CI stocks look like Procter & Gamble. Bottom left to upper right, not a ton of volatility. Pullback, sure, but top CI stocks are very resilient to those pullbacks. They've shown to be, and that's why they're top CI stocks. So when kind of putting this together, I knew what type of stock I wanted to favor, right? I wanted the bottom left to upper right, so it just made sense to start by using a sort like CI. So this is a more empirical approach, right? This is more of an empirical research exercise, because it's not just cherry picking stocks. It's taking 500 stocks, well, about 480 or so, because I didn't include oil, and ranking them by the stocks, or bringing the stocks up to the top that have shown the best ability to resist those pullbacks. Boy, do I want that, right? In this type of system, because I'm buying stocks that are falling. If I'm going to buy a stock that's falling in price, I want them to have shown the ability to kind of withstand those pullbacks. As long as they stay in an underlying uptrend, I have a chance. So as of March 7th of 2023, this is kind of the last time I did this webinar, I looked at those top CI stocks, and from March 7th of 22 to March 7th of 23, I took a year sample of the top 5 stocks in the S&P 500 watch list. 89 total RSI 2 setups across all 5 stocks, not each. Not 89 setups each. 74 winning trades, 15 losing trades. That's an 83% winning trade percentage. So this is a much more empirical, systematic way to trade this system, as opposed to, hey guys, here's one stock, it's a pretty good stock. Let me show you all the winning setups, right? Which I did with Procter & Gamble. And look, I have to do that because I have to teach you the system on a stock, and Procter & Gamble fits the bill in terms of the type of stock I want to favor. No, I haven't tried this on Forex, Fred. This is price based, so I wouldn't think that it wouldn't work on Forex, but I'm just going looking at underlying equities. Okay, now, all right, let's move forward. Since March 7th of 2023, those top 5 CI stocks in the S&P had 36 more RSI 2 setups. 29 winning trades, 7 losing trades. That's an 81% winning trade percentage. What's the common theme here? The common theme so far is 80 to 85% winning trades. And that's what I see consistently. When I trade this myself, when I run tests, when I do these webinars, I've been doing this webinar for years. And every time I look at the time that I do the webinar, March of 2023, August of 2001, September of 2019, no matter when I do it, I'm always showing folks and the attendees in this webinar what the top 5 CI stocks were at that time, how many RSI 2 setups there were over the last year, how many winners and how many losers. I always see 80 to 90% winning trades. Okay, now that's just winning percentage, and I said I only wanted you to focus on that first. Now we'll put kind of a dollar amount or monetary performance here to it. What you're looking at is a long-term portfolio from February of 2010 to current. And this portfolio here centers around the RSI2 technique that I just taught you, in that it buys stocks based on the entry criteria, but the exit criteria is a little different. The exit criteria is different here because this is an automated system. What I just taught you has to be managed manually, because you have to be there at the end of every day to see if the price of the stock is going to close above the 5-day moving average. Unfortunately, within VectorVest, we don't have a way to automate that, to automate price closing above the 5-day moving average, and I want to exit then. We don't have a way to automate that. So I had to kind of work with the exit criteria that's in the program. I'll talk about the exit criteria later, but just this portfolio centers around the RSI2 technique. So from February 8th of 2010, pretty much to current, 863% gain. You guys ready for this one? You sitting down? 261 winning trades, 20 losing trades for a 93% winning trade percentage. The VectorVest composite over that same time period only went up 160%. I say only, it's more than doubled in the same time period. But 93% winning trades. This is an automated approach. It's gone through some difficult periods like all automated trading systems do. Mike says it's a matter of the bull or the bear market, if we're in an up or a down market. There is a short side to the RSI2. I'm not going to go through that here. I'll explain it a little bit more in a moment. But depending on what the market's doing will then determine which setup you use. So yeah, I want to do bullish RSI2 trades in an up market. I want to do bearish RSI2 trades in a down market. You're probably thinking though, all right, well, okay, great. I have to go through all of these charts every day. If you're telling me I have to be at my computer at the end of every day, okay, to to identify when a stock is, one moment here, above or below the 5-period moving average, you probably think, well, I don't have the time to do that. What I'm about to tell you eliminates all of that time. No matter what we teach you here, we want you to be able to do it faster, smarter, and better. So you might be thinking, how can I take my game to the next level? You probably like this system. How can you not? 93% winning trades over 13 years in an automated fashion. 80 to 90% winning trades that I just showed you there, consistently doing it manually. If you're not there, if you're not making 80 to 90% winning trades, then you got to be thinking, how can I get there? Well, you can take bits and pieces of what I taught you today, or you can just allow us to give you all of the answers. So that's why we put together this 6-week webcast series where we teach you techniques from 3 of the very best professional traders in the industry. You'll learn top trading strategies of the pros and how to quickly and easily identify the best trades. I hope you saw that if you start learning how to implement techniques like this, you'll achieve the success that you're looking for. So let's talk about the course. Let's talk about the agenda, because it's a 6-module course. The 6 modules that I'm about to go through here are pre-recorded. They're in the university now, so once you register, I'll get to that in a moment, you'll see all of the modules all there. We will be meeting live 6 times for this class, but I'll go through that in a second. But let's talk about module number 1. Module number 1 lays the foundation. We get you in the correct mindset. We talk a little bit more about how the pros think, how to manage risk, and a very important segment in this first module, order entry, because not all orders are the same. We're not going to be placing just market orders all the time. We're going to be using different types of orders. So, and that would depend on the strategy taught. In module number 2, love this one, bullish and bearish candlestick reversal signals, how to trade them, where your confirmation levels are, where your stop loss levels are, where your profit targets should be with each setup. Module number 3, what is the market doing, and which indicators should I be using for that market environment. Meaning, in a trending market, I want to use trend indicators. In a channeling market, I want to use neutral indicators. In an extreme market, I want to use oscillators, overbought, oversold. So the theme here is, hey, what's the market doing first? Then you can start applying indicators that are more ideally suited for that environment. Because if you ever try to use the MACD in a channeling market, it fails you more times than it doesn't. So you got to match the indicator to the market. Then in module number 4, we get into our first professional trader's technique. This one is called the Holy Grail. This was developed by Linda Bradford-Ratchke. Now, myself and Steve Chappell, Steve is the Director of Trading Systems Development here at VectorVest, we are your co-instructors for this course. He comes in module number 4 and will teach you this technique by Linda Ratchke, the Holy Grail. And this is for both bullish and bearish markets. In module number 5, I'll come in and teach two systems that were developed by Charles Schaap, one called the 50-50 strategy, the other called AD Excellence. Uses ADX, obviously. I like the 50-50. It's a little bit more intermediate term, meaning you may hold on to stocks longer with the 50-50 than you would with the Holy Grail or the RSI 2, or even the RSI 25, which is another technique that Larry Connors developed exclusively for ETFs. Very similar to the RSI 2, a little different. But if you've been looking for an ETF strategy, really good one there with the RSI 25. All right, so those are the modules, pre-recorded, all in the university. Here are some special bonuses. We're going to throw in 1-year access to this course called Master the Art of Candlestick Analysis. This is a 6-session self-study course. And in module number 2 of Trade Like a Pro, we teach a couple of different bullish and bearish candlestick patterns. This is a 6-session course where we teach all reversal signals and how to trade them. Now, we sell this course in the university separately for $995. We're going to throw in 1-year access to it in the university as part of the Trade Like a Pro course. Now, that's a self-study. The Master the Art of Candlestick Analysis is self-study. No live mastery sessions. You can watch the old live sessions that we did. Everything's just self-study. With Trade Like a Pro, we will be meeting live 6 times. These live sessions are designed to implement the things that you learned in the course. We'll take a look at the things you're doing, answer questions you have during these sessions. You'll also be given a homework assignment after each module, and we'll go over that homework assignment here at the mastery session. So we'll be there during these sessions to guide you through each week. As an added bonus, if you currently don't have VectorVest 7 Premium, which is our real-time data, we're going to give you access to it for 70 days. This covers the duration of the course. This includes the Pro Trader scans, which I'll talk about in a second, and the auto timer, which is an automated market timing backtesting tool. So you might have VectorVest 7 intraday or the end of day data, We're going to give you access to VectorVest Premium for the 70 days during the course. Also, we're going to do a live bonus session. This is going to be a live trading session. This is my favorite session because here we wrap everything up. We implement everything that we learned over the 6 weeks. I'm going to show you how to use RoboTrader to manage trades. And we'll be trading with real money, not a ton. I'm not going to throw, 50 grand at a trade, but we'll trade with real money. I'll go through everything from market analysis to trade setup to trade execution and then trade management. Okay? And this is huge. You're probably thinking, all right, great. They're going to teach us the RSI 2. They teach us the Holy Grail. Like, I've never heard of the Holy Grail. How am I going to find my trades? The legwork has been done. I built these scans to quickly and easily identify the best candidates to trade, and the great thing about this is they'll be automatically inserted into your VectorVest 7 program so you don't have to build them yourselves. Okay? And then finally, you will be given this automated trading system that centers around the RSI 2. Now, with an automated system, there are variables that you need to have in place because this is supposed to be a completely hands-off type of an approach. That's what an automated trading system is, right? You want it to be hands-off. You want all the rules to dictate what the portfolio does on a given day, but you don't want to touch it. I don't mind automated systems. I have automated systems, but I do like doing things manually. And a lot of the systems that we teach in this course are manual systems, but there is an automated system for the RSI too. Now, with an with an automated system, there are things like, okay, how many stocks am I going to buy? Do I replace or not replace? How much capital do I deploy on replacement trades? What's my industry and sector diversification look like? What market timing system do I use? What my stop criteria is, right? All of those variables will be given to you as part of the Trade Like a Pro course. Remember, 13 years, 863% gain, 93% winning trades. VVC, the overall market only went up 160%. Most importantly, you'll get hands-on training by both Steve Chappell and myself. We'll be there in the chat rooms during the mastery sessions so you can ask questions throughout the course. Now, the course is valued at $2,995. We have an early bird rate that is available for $2,495. But for you folks here today, I want to thank you guys for joining me. I'm going to knock a couple of extra $100 off. So I'm going to type in the address that you see there, VectorVest.com/TLP. I'm going to type it in so you can just simply click on it. VectorVest.com/TLP. You'll see the $2,295 rate there. And it is only available for a very short period of time. Today is the last webinars that I'm doing. After today, it's going to revert back to the $2,495. So if you want to register, you got to get the best price possible, and we want to help you do that. Now, this is 100% money back guaranteed. If after the course is over, you've done the work, you've watched the recordings at least, and the modules are all pre-recorded, but our mastery sessions that we do live, they're recorded as well, and they'll be uploaded into the university. You've done all the assignments that we give you. You're still not satisfied, we'll gladly give you a refund. Now, we'll take the scans back, the searches back, and the RSI2 trading system, but we'll gladly give you a refund. Okay? Here are the dates for the live mastery support sessions. We begin, what's today? July 11th. 2 weeks from today. 2 weeks from today. July 25th is our first mastery session. So you have plenty of time to consume the content there that's in the university. Mastery session number 1, though, will only cover the contents of module number 1, and so on. Okay, we're not going to skip over. We're not going to jump to RSI 2 during the mastery session number 1. We're going to take it easy and take baby steps along the way. Each of these sessions start at 11 a.m. Eastern Time. Again, they are recorded, so if you can't be there live, you can watch the recordings within about 24 hours after we do the session. Okay? The live trading session will be on September 5th, and that is at 8:30 a.m. Eastern Time. That's an hour before the market opens because there's work to be done before the market opens. Your work doesn't start when the market opens. Your market analysis is done before the market opens. You running the scans, and we're going to do this live during this session. We'll run the scans live that everybody will have. We do that before the market opens. We set up trades before the market opens, and then when the market does open, we look to execute if follow-through is achieved. Okay, if confirmation is achieved. All right, guys, go to VectorVest.com/TLP to register. I'm going to stick around for just a few more minutes just to see if you guys have any questions about anything that I covered today. Okay. Mike says Procter & Gamble and LW have the perfect setup today and just waiting for the closing price to enter. Let's take a look. I closed my VectorVest program for some reason. Let me just hop in there real quick. I'm not going to look at a ton of stocks here for you guys, but I just want to look at those two because they're real-life examples, real-time examples. Thank you, Mike, for that. No, Pamela, there is no Canadian content. It's all done in the U.S. market, but the systems translate to the Canadian market. The searches will not be added to your Canadian program. They'll only be added to your VectorVest 7 US program. You can build them in the Canadian program yourselves if you want to. Okay, it's just a duplicate. So Mike is saying, okay, PG, LW, showing an RSI, and it's so funny, right? I have the RSI 2 set up on my default. But you're right, it is, right? Here's Procter & Gamble, hard right edge, 5-day moving average in white, 200-day moving average in purple, 2-period RSI down at the bottom in green. This line here is about at 10. So yes, price below the 200, I'm sorry, above the 200-day moving average, but below the 5-day moving average with the 2-period RSI below 10. So yes, it is showing us an RSI2 setup. Same thing with LW. So let's take a look at just some recent RSI2 trades here with this one. If we would have bought the stock there, right? Price above the 200-day moving average, but below the 5-day moving average with the 2-period RSI below 10. If we would have bought it there at 109.87 roughly, we would have sold it here at 111.20. That's when the price closed above that 5-period moving average. If we would have bought it there, or there, we would have made money. What about here? Well, here, no, because the price of the stock doesn't look like it was at 113.30. The 5-period moving average was 113.08. So the price was not below the 5-period moving average there. What about here? The price was below the 5-period moving average. 2-period RSI below 10. If we would have bought it there at 113.11 near the close of that day, we would have sold it the very next day at a win. So all winning trades here, in just the last couple of months. But nice eye there, Mike. Because, yes, we do have another RSI2 set up today. Okay. Yes, thank you, David. Appreciate that. In the handout section, guys, of your GoToMeeting control panel, I'm going to put my slides in there. You're going to see it in a moment. You should see a TLP PDF. You should see it there in the handout section of your GoToMeeting control panel. Philip is asking, after completing the course, what VectorVest subscription do you need to maintain and keep the automated trading system going? You need VectorVest 7 Premium, or at least the Pro Trader and the Auto Timer add-on modules, because Pro Trader gives you the scans, the technical scans, which include the RSI2, right? You can't scan for an RSI2 or an RSI indicator period without the Pro Trader module, and the Auto Timer gives us the automated system. Doreen is asking, Jerry, do you continue to provide RSI stocks to us for a lifetime after the course ends? I don't provide you with anything. So this is not a newsletter, so to speak, where we provide you with stocks. This course teaches you the technique, and then moving forward, you have a scan that will find the stocks to trade. Moving forward, okay? Let's see here. Let me move that over. Let me do this for a second. There we go. Okay, so in your David, in your handout section of your GoToMeeting control panel, look over on your, if you can't see, click on that orange arrow that kind of opens up your GoToMeeting control panel. There is a section there that says handouts. It says TLP and it's a PDF. Does everybody see it? It's there. So Patrick says, if you have the ultimate retirement solution, is a trade like a pro included? No, it's not. Okay, Philip says, yes, he sees it. So David, it's in there. It's in the handout section. It says TLP. It's a PDF. If you have the ultimate retirement solution, is trade like a pro included? No, it's not. It's a entirely different. The ultimate retirement solution is an options methodology. This is not. We're trading the underlying stocks using technical indicators, so not included. All right. Got it. Awesome. Joseph got the TLP PDF. Thanks. You're welcome. I think that'll help. You can kind of go through that later once you maybe watch the recording. I am recording this session. You will get a version of today's recording. I might send out one of the ones I did last week. Might a little bit better today, but it's the same content there. So when you go through the recording a little bit later this evening, you'll have the slides to kind of match up. Thank you, Philip. Yep, Philip says the PDF is there. Awesome. All right, guys. Well, I hope you enjoyed today's webinar, learned a little something. Great technique. I love the RSI2, my absolute favorite, top of my swing trading list. There's a lot of other ones I use. I love candlestick signals. I love some of the ones that we teach in our Mastering Moving Averages course, but RSI2, top of the food chain when it comes to short-term trading systems that I use myself. So we look forward to working with you. This is my favorite course. This is Steve's favorite course to teach. So go to that website, guys, that you see there, www.vectorvest.com/TLP. The $22.95 rate is the lowest rate that we have for non-elite members. An elite member is someone who's been with us for more than 5 years. You have the lowest rate available, $14.97.50. That's always your rate. That's half off the regular price. But the $22.95 rate is for non-elite members. That will revert to the early bird of $24.95 very shortly after I do these webinars here today. So have a great day, everybody. Looking forward to working with you. And we got 2 weeks. See you guys in 2 weeks. Take care, everybody.